Good morning, everybody. It's the 13th of April. We're Signal Centre talking ball. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, pretty good, mate. Thank you.
Good, good. Bit of a red wine-induced hangover for us both today.
Yeah.
Yeah, a few technical issues yesterday, sadly, so we couldn't get the stream on, which was disappointing ahead of the CPI number in the US. But we'll do our best to make up for it today with all the latest headlines and a look at all the charts. As always, if anybody's got any requests of markets they'd like us to check out, please feel free to post them up, and we will cover those as best as we possibly can. Okay, so let's get into the headlines then. Let me just bring up the those on the screen before I go through them. Sorry, a bit unprepared today. Wonder why. Here we go. Okay, so headline inflation yesterday declined sharply. The US consumer prices increased 0.1% for March, slightly below the consensus forecast of 0.2%, and the year-on-year inflation rate declined to 5% from 6%, and this was below the expectations of 5.2% and the lowest headline reading since June 2021. Core inflation, however, did edge higher. Underlying prices increased 0.4% on the month, with the year-on-year rate edging higher to 5.6% from 5.5%, in line with market expectations. We also had Fed minutes out yesterday showing banking concerns. According to the minutes from the March policy meeting, several officials considered whether to pause rates at the meeting. Many officials also lowered their estimate of peak rates following strains in the banking sector. The San Francisco head Daly stated that the central bank has more work to do on raising interest rates. She added that there is a lot of uncertainty about how long it will take for rate hikes to impact the economy. She also commented that the Fed is at the point where it does not expect to increase rates at every meeting. The dollar lost ground yesterday as a result of the inflation data and some relief that it was not worse than expected. Euro US dollar posted solid gains to test the 1.1 level for the first time in over 2 months, while the dollar index tested the April lows. The Bank of Canada had an interest rate decision yesterday. They kept rates on hold at 4.5%. Following the latest meeting, that was in line with the consensus forecast. And overnight, we've seen some strong employment data in Australia, a big increase there in the labour market, stronger than expected, with the employment increase to 53,000 for March, compared with expectations of 20,000. We had UK GDP this morning, no recorded change in the GDP for February, compared with expectations of a 0.1% increase, with a marginal 0.1% increase on a 3-month basis. And today we have US producer prices data. The annual increase is forecast to slow to 3% from 4.6%. So that's it for the headlines. Let's have a look at some charts. Steve, do you want to kick us off with a look at cryptocurrencies?
Yeah, sure. Let's dive into it. Just get my screen up. Here we go. Looking at Bitcoin, obviously, and we can see that we are in that area of resistance that is formed from all of these lows, really going all the way back to January 21. So over 2 years worth of data here that you can see where price action was really supported initially. Since we've gone through it, this is the first real test of that support now turned into resistance. And we've stalled around this 3,000 level. So it's a bit of a psychological number, I suppose. But we have formed a bit of a bullish formation, a bottom formation, mainly in the shape of this inverse head and shoulders formation, which we've broken up through the neckline. We'll call that 25,400. And potentially, I think we need to really retest this neckline before we can be confident that we are going to project higher. We've got a measured move target on, show you the weekly chart. Measured move target for this inverse head and shoulders formation is 35,000. So potential to go up 5,000 points. I think we've still got a lot of work to do to get any further than that. So yeah, but so far this week we've been really positive and we've held up around these resistance prices. So looking good. Ethereum, we haven't quite got to that same level. We can see there's a neckline here that comes in at 2032, and we're still a little bit of a way from it. And but we have broken above a previous supportive area, which we have breached here in August last year, and we're now breaching again. But there's a further resistance up at 2032, as I say, and we are gradually heading up there. XRP, we've got a resistance at 55.82 cents. We have poked our heads above it, up to 58.50, and retraced a few weeks ago. We haven't really got to that level either. So Ethereum, XRP for me still has a lot more work to do, and still overall longer term we are still bearish, but we are attempting to move higher. If you look at all the others that we've listed here and that have been interesting coins over time, most of them are still languishing at sort of like roughly zero levels. We've got Solano, the weekly. If we look at the weekly charts, I was looking at these a little bit earlier. We haven't really sort of like bounced like yeah, some of these look pretty poor, but overall that the main three that we got, Bitcoin, Ethereum and XRP, really attempting to push higher. Commodities, let's take a look at gold. Gold, there's nothing holding this back, and we managed to poke a new yearly high, well, the highest levels year to date actually, but also over the last year. 7th of March last year we made that high at 2070, which was just short of the all-time high which was posted in August 2020. We got up to 2032, and let's just go back to the daily and see how well we're performing here. We've broken up through this downward trending resistance level, and we've come back, retested that reverse trend line and pushed higher. So yeah, looking pretty positive. 2 positive days of price action, and looking for a third today. Off to a really good start, so I expect that to move higher and really challenge those all-time highs. I don't think it'll be long before we're there. Crude oil continues to be supported by the threat of OPEC plus nations cutting oil production, and we've managed to get above the highs that we saw at the start of the year, and yeah, we're trading above there now. We've got a big gap on the charts from between $79 and $75.65, and yeah, at some point I expect that to be filled, but at the moment it's just price action pushing higher and nothing holding it back. Brent crude oil, we have managed to get past the sort of initial resistance, but we haven't taken out January's high yet. We are still trading at a premium, but it's just under a $4 premium to WTI crude oil, so that premium is converging. And we've got the 200-day moving average that comes in at 86.80, further resistance up at $89. So Brent crude is also moving higher, but not as fast as the WTI crude. And natural gas continues to cling to these lows around about just in front of the $2 level. $2.07 is the low we've had. Yesterday was a big reversal. We saw it move from 230 and closed around about 217. And under pressure again this morning. That could be a good gun to head, actually, considering them all. But yeah, dollar has actually moved weaker. That has given rise to, has supported a lot of these dollar-based commodities. And yeah, I expect that move to continue. It feels like the dollar is really struggling, even after the Fed last.
It is. Yeah, it really is. I mean, we can see here that it's trading in this kind of bearish wedge or channel, moving lower. Does have the potential, of course, at some point to break out from that and maybe correct to the upside. But we had this gap that formed on the chart on the 28th of March, and that really has contained price at 102.83. We're now testing, or very close to testing, this support at 101.30, which is the previous lows from back here in May 2022. Obviously, we had a reaction at this point here in February, where prices then rallied pretty substantially, but it looks as though we're grinding into that level again. and the chances are we may take out these lows the way things are shaping up at the moment. So yeah, still looking very bearish on the outlook for the US dollar at the moment. Let's take a look at some of the currencies linked to that. We can see Euro US dollar continues to trade within this kind of bullish channel that we have on the chart. We are approaching previous swing highs that were posted in early February. We've kind of broken out of a bit of a flag pattern there and continuing higher. Big bullish day yesterday. Bit of indecision so far today, just in front of this major support, which is coming in at 110.38. So looks pretty strong. If we can break through that level there, then we're starting to target this 61.8% fib level at 112.74. All in all, looking pretty strong there. Similar situation for cable as well. Broke through this resistance at 124.30. Looks as though we formed a bit of a bullish flag here, a continuation pattern suggesting we're going to see higher prices. The next level to look for is these highs that we posted back in May 2022 up at 126.66. So looking very positive there. And obviously these currencies taking advantage of the fact that the dollar is pretty weak at the moment. Not really seeing such strong price action in some of the commodity currencies. Aussie, US dollar, a very mixed picture here at the moment. It traded in a bit of a wedge pattern here. We broke to the upside. Then we've got another kind of wedge formation taking shape here, which we broke down from. And we do still have resistance at around 67.16 on Aussie, US dollar. We're into that level now. Be interesting to see if the dollar weakness will persist and this can continue to push higher. But it's a pretty mixed picture on this at the moment. And it's a similar situation with New Zealand dollar as well. A little bit clearer here. We've broken out of this wedge to the downside. Then we form this kind of corrective wedge, which we've broken out to the downside. And yeah, very mixed at the moment. Looks as though it may be forming some sort of top. So not great price action there on the commodity currencies. Take a look at dollar yen, a bit of a mixed picture here as well. Price is kind of sideways at the moment. These two kind of battling it out for which is the weaker currency. A couple of requests have come in and we're going to look at those now. So first I'm going to look at Aussie Swiss, which has been requested by Mark on TradingView. We can see here that prices continue to trade in bearish formation, trading within a bearish channel as things stand. We did have a 61.8% fib level at 60.74, which provided some support in the short term, but in recent sessions we've broken down through that and showing no real signs of reversing at the moment. Obviously, if you did want to speculate on the long side of that in the short term, then ideally you want to see some sort of powerful kind of reversal candle, maybe some sort of bullish outside day or engulfing candle or a bullish hammer. No signs of that forming at the moment, so do be careful here. It is a bit of a falling knife, so I think the situation there is looking for opportunities to sell into strength. Looking at sterling yen, as that's been requested as well. As we know, we talked about it for a while. Prices were trapped within this kind of short-term downtrend. We've seen a very powerful breakout to the upside here following this big move that we saw on the 29th of March, and prices have continued to move higher since. We did stall into resistance here and posted a shooting star candle on the 4th of April, which kind of tempered prices in the short term, but we've now seen prices continue to move higher and now starting to challenge that high that we posted on the 4th of April and trying to push through it. Yesterday, we had a little bit of a look at that level. We posted a doji candle, so a little bit of indecision, but today we are on the front foot and looking to try and break through those levels and through yesterday's highs. So that's looking pretty strong indeed. In terms of next levels on the upside, I'd be looking probably into this region here where we have some previous swing highs and a 78.6% fib level at 168.53. So that's looking pretty strong in the short term. The other request was for Aussie yen. And this is a bit of a mixed picture still as well. Ultimately, still for me, looks like it's trading with a kind of bearish bias. We've got a head and shoulders here that hasn't completely played out, but still not done enough to be invalidated yet for me either. So we are into some maybe resistance in the short term around 89.53. Let's take a look at the intradays and see if there's anything shaping up here. This was actually a gun to the head trade I did earlier in the week, which didn't play out. Looking at this on the hourly, we can see that it looks to be forming, having formed 5 waves higher, maybe an ABC correction at the moment. So into kind of the B leg of that, suggesting maybe that we're about to embark on a C leg lower in the short term. So yeah, mixed picture. I mean, short term looks as though it is trying to move to the upside. I would say there's probably some intraday support around this level here, which is 89.20. So providing that continues to hold, then there is maybe a little bit more in the short term to the upside that could be had. We've got a short term 78.6% fib level at 89.62. So I'll leave that there for the currencies, and Steve, we can take a look at some indices.
Thanks, mate. Just looking at my next
Yeah,
gun to
you were
head
ready to
trade
go there,
idea.
weren't you?
Yeah, it was. Yeah, taking a look at FTSE to start with. We pushed higher and we have made we're trading at the highest level since the 9th of March. But we did form a bit of a shooting star candle yesterday, reacted from around about where we thought resistance would be, which was previously a support level at 78.50. And we managed to get up to 78.61, 62, and reverse sharply lower from there. So still a lot of work to do on the FTSE side of things, but it has, from this double bottom, we have hit that measured move target. We are above all of the moving average lines that we can throw at this chart, and sitting quite nice, quite positively, but maybe a sign of a little bit of a stall in this rally higher. The DAX, again, that had a decent reaction high yesterday, got up to 15,830 before reversing very sharply indeed, and closing about 150 points lower than that, 15,673. Price action today has been positive, but you can see that the sort of like the rallies higher have been sold into. We are trading at this previous resistance level, and yeah, still a little bit to go before we hit them all-time highs, just about 16,000, well, around 16,300, but pretty positive start to the sort of like trading day to day. Taking a look at Dow shooting star candle yesterday, and it actually closed lower than it opened, so it looks quite bearish. And again, we were off to quite a decent start this morning, but have we seen a little bit of a rejection, maybe a stall in this rally higher? Nasdaq, that topped out more recently. 4th of April, we saw the high at 13,237. Yesterday, we got up to 13,144 before reversing. I think that's a 9-day moving average that we're seeing. Yeah, 9-day simple moving average on the chart here that we are trading below. And although we've off to a good start, I think that's got much more work to do on the upside. And the same sort of candle on the S&P's shooting star candle, potential for a bit of a reversal by the looks of things on the indices. We've just seen like a bit of a sideways to steady climb with on these over the last week or so. Maybe we have got a little bit of a test of bullish resolve. We've got this, drawing this channel. We've got support coming in maybe in the SPs around about the 4,060 level in this channel. And remember, the weekly channel really isn't convinced yet. This weekly bearish channel, we've got decent touch points on the top side, and last week's doji also got a doji this week, maybe even a reversal. Potentially, are we forming a evening doji star formation? Maybe. But yeah, that's the indices. Now might go back to my continuation of dollar weakness for the gun to head trade idea, Joe.
Okay, cool. So just a quick recap on what we do here. So the gun to the head challenge is where Steve and I pick live trade ideas on the stream. We place them on a live account as well that we're running with Awanda. We started off with £2,000, probably still around that kind of level. So it's been a bit of a grind. But the basic rules of the game are we both come up with the trade idea. We both risk 1% of trading capital. We must have stops and targets on these ideas and risk reward ratios that are better than 2 to 1. The ideas are closed out at 9 p.m. UK time unless the stops or the targets are hit. So we don't carry anything overnight. We're just having a go between now basically and 9 o'clock to see if we can make a profit. So despite us not having the stream up and running yesterday due to some technical issues, Steve couldn't help himself. He wanted to have a go at a trade, and he did. And it was a lose, wasn't it, Steve? Have you got? I don't know if you can bring it up quickly. It was Swiss franc, Japanese yen, I believe.
Yeah, it was. I can bring it up here.
To talk us through that.
I don't. I'm embarrassed about it, really, but no. It looked like price action was stalling at previous levels. So I took the high from the December levels here,
Yeah.
and we tested it and reversed sharply lower, and it looked like we'd formed a bit of a well, we had a bearish outside candle on the hourly chart, so it looked pretty ripe for picking.
Yeah.
Got off to an okay start, but stopped out at 1 o'clock. Yeah, it was around about the 1 o'clock time frame. Got stopped out, and then we did poke higher. So quite an aggressive trade, but yeah.
Yeah,
Didn't
well,
work.
you know, it was that is the nature of what we're doing here. They are speculative trades. So obviously take anything that we say with a pinch of salt, but we are trading these with a live accounts. We're trying to put our money where our mouth is on these things and show, you know, the standard kind of difficulties that many traders face out there, and, you know, highlight that trading isn't a simple game. So Steve, you got another one ready for us here?
Yeah, I just think this it's a surprise that the dollar, despite the sort of Fed minutes, has really weakened, and expect a bit of continuation on the downside for the dollar. The price action on the daily chart on dollar yen, I'm looking at in particular, we've seen a bearish outside candle after this hanging man candle. So again, that evening star, evening doji formation forming, potential for prices to move lower. Normal range about 138 points on the dollar yen. The high today is 133.37, so targeting a low of 132 if we don't manage to sort of like push higher. And it does feel like we're not far away from this, like retesting these this support level around about the 133 mark. So just trading above there now. So I would have got in a little bit earlier, but yeah, just adjusting it slightly, get this trade on before it runs away. Looking at a 1% risk reward, 133, and target 133.44.7, and targeting a move to 132.16.
2.2.
2.2, my favorite.
Happy days. Okay, best of luck. Right, that's live. I'm going to take a look at a currency as well, looking at Euro Oz, and let me talk you through this one. So this is the daily chart here. We're going back some time. This is the highs that we posted in 2020. So we can see here in recent times, we formed a double bottom formation here. Really nice price action, broke through that, pulled back, found support, prices have rallied higher. Now we're into a major resistance level. This is the previous swing high from August 2021. We've also got the measured move of the double bottom pattern, which comes in at 163.80. So we've rallied into that level too. And why I was bringing up the longer term charts, because if you do a fib drawing from these highs that we posted in March 2020 down to these lows that we posted in August 22, the 38.2% fib level also pretty much comes in where price is at the moment. So we're into a big resistance area here. It looks as though we have poked above that this morning, but then posted a bit of a rejection. So is this going to be a step too far in the short term for this currency to overcome? It's obviously come a very long way in a fairly short space of time. So I'm going to speculate on lower prices here in the very short term. So it's currently trading at 163.80. So I'm going to attempt selling it here with a stop above this morning's highs. That's at 164.47. You got that, Steve?
Yeah.
And a target at 162.26. So about 2.2 as well.
Nice one, Joe. Yeah, let's try and get that on now. Selling 1% risk. That's at 164.47. Targeting a move to 162.26. There we go. We're in, Joe.
So we've got two trades on there. We will post them up to our trading view profile as well. So if anybody wants to follow their progress throughout the day, feel free to do so. Okay, fantastic. Thank you, Steve. Right, day ahead. Let's take a look at what we can expect from the day ahead. So we've got US producer prices at 1:30. We've also got US jobless claims at the same time. So the US producer prices is really going to be the kind of main focus today. The headline annual increase is forecast to slow to 3% from 4.6%. So we'll be keeping watch on that. Obviously, CPI was the kind of bigger number in the inflation category, and that was out yesterday, which is pretty much the biggest kind of market moving number out there at the moment. So that's out the way. And for the rest of the week, we've got US retail sales tomorrow to wrap things up. And then next week, we're looking at some inflation data in the UK as well as the global PMIs. So that's it from us today, Steve. We managed to get through it despite some fuzzy heads. Thank you, everybody, for joining. We hope it's been useful, and we will be back tomorrow to wrap up the week.
Cheers all.
Have a good day. Bye-bye.